Hello and welcome to another update video about ADA. Today we want to cover only the area here around this Elliott wave triangle that we've been talking about for over a week now. Seems like we are getting follow through to the downside, already indicated in yesterday's video that it would be quite likely to start the downturn soon, because in this last wave of the triangle, so again the triangle always has 5 waves, A, B, C, D, E. And we had the situation that in the last wave of the triangle, which is the E wave, we had already a nice correctively looking structure complete or nearly complete. And that's when we need to have it on the radar that we can start the breakdown. That happened, and we now broke below the B wave low, we broke below the D wave low. That's what we wanted to see in terms of confirming a breakout of the triangle. If it now doesn't follow through to the downside, but instead goes up, it was not a triangle, and then we get some kind of a flat pattern, and the B wave here, which I currently count as end of the triangle, would just reset a little bit higher. We talked about resistance area for a high, or resistance areas for a higher B wave earlier. Yeah, so we've got here, for example, 42 cents, 43 and 44.4 would be the most imminent standard Fibonacci resistance area for a B wave in case we do not go down further from here. At the moment though, everything is going according to the analysis, especially on a smaller time frame. That is not always the case, but it's following it nicely at the moment. We broke down of this triangle. Yeah, obviously we're recovering a little bit at the moment, but that's not a problem as long as we do not exceed the E wave high, which was printed yesterday, on Friday actually, no, Saturday, and that is at 39.7 cents. So as long as we are below the 39.7 cent level, we can carry on to be focused on the downside, because this is now the invalidation point for the idea that we already are in a C wave down. For ADA, it would be better, or it would have been better, if it would have printed a higher B wave. Why is that the case? Because with a higher B wave, any C wave that comes down afterwards to complete this wave 2 that we talked about, yeah, this correction, would have had more space. At the moment, the problem is this C wave would be quite short compared to the A wave. So as I said in the last few videos, it's important to hold the 33.3 cent level. If we break below that level, we have to challenge the direct bullish scenario. But I explained that in previous videos. I will do that again, but let's focus only on the imminent count today. The idea is now that in this C wave down, we are following a 5-wave structure that could be a so-called ending diagonal that would be typically quite flat. I think we have a good case that we can make that the wave 1 is finished. Okay, maybe one more leg down in wave 1, but it could be that we're now in the wave 2, and I added here a resistance area for the wave 2, measured that yesterday, and as long as we stay below 39.2 cents, it is likely to follow through with a third wave to the downside. Now you will say, okay, you just told us the E wave high, which is a little higher. Yes, there's a difference. The E wave high is the actual invalidation point. Here I have to change my wave count. The break above 39.2 cents is just a first warning that the move down and the follow through to the downside may not work out. So yeah, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.